Hello and welcome to the big picture. The steady hurtling down of the value of the Indian rupee in comparison to the US dollar has caused a lot of concern, even as Finance Minister P. Chidambaram today sought to calm the nerves, saying that there is no need to panic. The situation, however, continues to worry economic analysts and investors alike, as the current account deficit is at an all-time high. The investments have slowed down and the foreign investors are taking back their dollars to the US. Addressing the media today, the finance minister, however, expressed hope that the economy was on the mend and promised several reform measures soon, while appealing to the people to stop buying gold in the interests of the country. What is the state of the Indian economy now, and how will the fall of the rupee impact it? Are there any signs of the economy recovering as the finance minister claims, or are we headed towards more problems? We will discuss all this today with a panel of experts who understands the economy and its nuances. I have with me Renu, a macroeconomist who was a former staff member of the International Monetary Fund and the RBI, Paranjoy Guha Thakurta, a senior journalist and an economic analyst, Aman Agarwal, Vice Chairman, Indian Institute of Finance, and Dr. S.P. Sharma, Chief Economist at the PhD Chamber of Commerce and Industry. Welcome to all of you. Let me go to Renu Kohli first. Renu, today the Finance Minister says that there is no need to panic. The fall in the rupee will correct itself. People who are supposed to do it, who are supposed to do it will do it. So don't panic. So is there no need to panic?
Yeah, I would go along with that. First of all, it's his job to infuse confidence as the finance minister, which is what he is doing, because investors are fleeing and the currency is bearing the impact. So it is a confidence boosting talk.
Right.
Beyond that, however, much of the rupee's fall is actually due to global factors.
Right.
But the magnitude of the fall is partly because of the current account deficit, as you just mentioned.
Yeah. So but you personally think that there is no need to panic. Forget what the finance minister is saying.
First of all, the rupee is reflecting the exit of or sudden abrupt reversal or selling by foreign investors. So that is what, and it is more reflecting, say, about a large fraction of that exit is more due to changing prices and adjustments in global commodity, foreign currency and stocks and bond markets, and lesser to do with this. Okay. Despite the fact, however, because India's current account is more financed by volatile capital, right, therefore it is more affected.
Okay. Professor Aman Agarwal, you agree with Renu Kohli? You think that this is something which will pass, the rupee will get stabilized later?
I'm surprised to read some of the news items which have been coming in the last couple of days, specifically talking about the FII investment withdrawals which are taking place. You see, if you really look at the FII investment, the major investment of FIIs is in the portfolio segment, in the stock markets. And the stock market is still hovering around 19,500,
yes,
for the last 1 week, 10 days. So it's nothing which has been withdrawn per se, despite the fact that the rupee has been falling like anything for the last 1 month now. So I don't really perceive the FII typically happening, causing this particular game to come down. There are two components.
But that is the popular sentiment, is that this, the investors are taking back the money.
Yes, there is somewhere which is there, because there is a run on the rupee in terms of purchase of dollar which is taking place. Then where is it? That's what RBI needs to investigate. In my opinion, there are two segments which I personally feel which seem to be there, given the factor that macroeconomic credentials are typically holding them to themselves. Whether we look at the fiscal deficit, whether we look at the foreign exchange reserves, whether we look at the GDP growth, whether we look at the IPP figures, all of them are standing still fairly well in favor of the Indian economic growth. Then what is going wrong? One thing which we have seen in the history also in various countries and also in Southeast Asia, which happened when the crisis took place, was that some of the central banks at times allow the devaluation of a currency to take place for the purpose of rebalancing their balance sheets.
Right.
Because most of their assets are in dollar or a foreign currency base, along with gold, which is also termed in the US dollar base or a euro base structure. Now, when you devalue, automatically your balance sheet assets increase, and that helps you reduce your fiscal deficit. So, your fiscal deficit, which is 5.1% projected, is around 5.2% still. The current account deficit is a day-to-day balancing trade, which goes up and goes down on a monthly basis. So, most ministries can modulate it by saying that it is not a cause of worry. There is one issue which is certainly keeping up on the charts is the IPL issue, which has not been debated. IPL has huge investment coming from various areas all over the world in terms of the shareholding which they have in these teams which have been created, plus the investment which goes in terms of the kind of business which it has become instead of a game which it was supposed to be. Now, it has been upholding.
This is a very interesting, nobody has spoken about
I'm surprised no one is talking about it. These 1 month has been a tumble down effect on the IPL, and there is going to be a rush on the rupee in the sense those investors who have invested the money treating it as a business than a game, they would like to withdraw. If you really look at a couple of days back, even Economic Times, I think day before, came out with a chart of who is holding what shareholding. Right. There is no clarity on what is the shareholding pattern of various groups which are there. And even some of them who have declared it have a foreign investor investing a huge money. Now, they are concerned when they do not know what is happening with the players, what is going to happen with the game, are we going to go forward, is there going to be a stop? They would certainly want to withdraw. And this is a crore dollar.
Is that investment in IPL so much that it can affect?
It will majorly impact the kind of magnitude we are looking at in terms of IPL, in terms of shareholding.
So you're okay. So you're now saying that IPL is maybe partly responsible
could be one.
for it, and also that you suspect that there is something happening beyond what normally people are saying, that because the investors taking back the money, the US dollar.
If the investors are taking back, where is it affecting? Is it the FDI where it is affecting? Is it the FIIs which is affected? I do not see the stock markets going down.
Okay.
I do not see the FDI flows coming down. So, 6 months has been better than the previous 6 months, and every month if you look at the FDI flow, it has been consistent. It has not gone down.
Dr. Sharma, I think Renu Kohli wants to react to this. Let us get Renu. Yes, Renu.
I just wanted to add to enter this discussion at this point to say that much of the exit is actually from fixed income market, debt market, and that is because yields and there is a flight to safety and there is a readjustment going on. And then of late, in the last few days, it is stock selling. So much of it is coming from there, and this kind of volatility will continue because of what is happening in the global markets. Essentially, I mean, if you can put it in a nutshell, it is because of the Fed chairman's remarks to say that they would be contemplating the end of an end to their easy money policies at some point. So that's why these abrupt readjustments are taking place. Okay. So as far as the economy is concerned, it's actually, turning positively, but though of course very weak at this moment.
Okay, Dr. Sharma, do you go with Renu Kohli on this, or what Aman may say?
I'm a little bit different, because volatility is always there. When markets were hovering around 40 to 4300 in Nifty, Rupee was in 44-45 trajectory.
Right.
Now markets are at 57-5800, but Rupee is around 58-59. So Rupee weakness is majorly because of dollar strength, and dollar is strengthening majorly because of weakness.
But what about Professor Agarwal says that there is no change in he doesn't agree with that.
Yeah, dollar strength is majorly because of the weakness in yen and weakness in Eurozone currencies that have undermined the performance of every emerging market economy. So we are not alone.
We are the worst as far as the emerging market.
Yes, we are worst because of domestic factors also, because we have high current account deficit and weakness in economy also. We have not any sustained industry growth. Industry growth is less than 5%, hovering around 1 to 2%, and inflation is still high in the high trajectory, the CPI inflation, and there is no policy reform also.
Right.
So that's why we are weak in domestic economy, and we are impacted more as compared with the emerging markets.
So what you are saying is it's a mixture of mismanagement as well as the global factors.
Yes.
Okay. Paranjoy.
What has been said by Renu and Dr. Sharma is correct. There are international factors that have contributed to the present situation. For instance, 1 minute.
When you finish, I want you to address what Aman Agarwal said about the IPL thing also.
That that is his theory.
Yeah.
He's certainly entitled to his theory. I would prefer to look at the whole situation from a macroeconomic perspective and a political economic perspective, because I think we've entered into a classic vicious cycle of stagnation, a Chakravayu India style. Let me try and explain why I'm saying what I'm saying. Let's look at the international factors. Okay, yes, today your rupee is weak, your exports have become cheaper, they should have become more competitive, but your traditional markets for exports, especially the markets in the West like Europe, they've either shrunk or disappeared altogether, whether it be garments and textiles, whether it be gems and jewelry, whether it be polished diamonds, whether it be handicrafts or processed foods. Point number one. Now,
and this is because of the
recession in the West. Correct. But let's look at some of the internal factors, because I do believe that the principal reason why we have a high current account deficit in the December quarter is 6.7% of GDP, close to about $33 billion, an increase of nearly 50% over the previous quarter. Why is this? Because we have a high trade deficit. There are certain kinds of imports that we are doing which are inelastic. Okay, 80% of our total requirements of crude oil are imported. The next biggest item of import is gold. Finance Minister saying don't buy gold, don't buy gold, don't buy gold. Just because he's saying so, it doesn't mean people will
are not going to stop buying gold.
You increase the customs duty to 6% to 8%. You don't want to increase it more because you say it's going to lead to smuggling. But you cannot control smuggling. But wait. Why are people investing in gold? Because you have a high inflation rate.
Right.
Because people believe gold is the best hedge against inflation. Now, let's look at the vicious cycle. In rupee terms, your cost of oil imports have gone up. It's putting pressure on Indian oil and Hindustan Petroleum and Bharat Petroleum.
Today the finance minister was hoping that the price of oil will come down by $1 and the falling rupee will be stabilized.
Yes, but in rupee terms, you have pressure on the oil companies. You want to align international energy prices with domestic prices. You're allowing a creeping increase in diesel prices. An increase in diesel prices means what? Your wholesale price index, your consumer price index goes up. Now, you want to tell people don't invest in gold, but you can't control inflation. Second point, you are saying your inflation has eased a bit. Yes, it's eased a bit, but this has come in the wake of consistently high inflation, especially food inflation, which has widened social inequalities, the economic inequalities. And just because it's eased a bit, it doesn't mean that prices have started falling. It's your car was moving at 100 kilometers an hour, now it's moving at 60 kilometers an hour. And you're not going to be able to dissuade people from investing in gold just by telling people, Mr. Chidambaram saying, I am a happy man because I don't have investment in gold. You have entered into a classic vicious cycle. Investment in gold, high current account deficit. High current account deficit. Why investment in gold? Because of inflation. You can't control inflation. What is the reason for not controlling inflation? Important reason is increase in fuel prices, including diesel prices. So, stagnation, inflation, GDP growth rate down from 9% to 5%. So, I'm sorry to say, at the end of 9 years of two UPA governments, I think the government seems to be running out of ideas. Yes, you can blame external factors, but today we are also, the situation we're in is a consequence of the policies that have been followed or not followed by the UPA government over the last 9 years.
Okay. On that note, I think we'll need to go into a very short break, but there are several other issues which needs to be discussed. Very major things which have been discussed here. Paranjoy's analysis that there has been a mismanagement of the economy is something which we'll pursue in the second half. Please keep watching. We'll come back very soon. Welcome back. We are discussing the fall in the rupee and what kind of an impact it will have on the economy. Renu Kohli, coming back to you, I was reading an article which you wrote last year, I think during last summer. You said that, the present downturn, last year you were saying this present downturn suggests that it's cyclical. You also blamed the government for some mismanagement of the economy and fiscal indiscipline and all that, but you had some hopes that things will turn around. But when I was reading this article, which is 1 year old, all the problems which you were pointing there seems to remain just 1 year later also. And also there's what Paranjoy says, that we are caught in a vicious circle.
Yeah, Paranjoy is right, and since he's spoken of the past mismanagement, Let me be a little more, let me take things forward from where he left off.
Okay.
You're right about what I had said last year. And since last year, actually for the past 5 quarters, the economy has stabilized. It's like sort of growth, GDP growth has been in the range of 5% or so. But within that, if you see, within the components or the breakup of GDP components, you can see some bit of readjustment going on, which is that the fiscal deficit has come down, and therefore the GDP counterpart of that, which is public consumption or government consumption, is actually slowing the growth rate in that. And there is a very feeble pickup in private investment. So what we can see is a switch in spending from public to private business spending, though of course, as you rightly pointed out, and as Paranjoy also pointed out, it is at a very weak level. So that's what is keeping the economy at a very low growth rate in the 5% range. But at the same time, it has stabilized. Looking ahead, there are some other corrective measures that are taking place, which give us, which I think will show up in a narrowing of the current account deficit. But as happens in most cases, when there is so much of indigestion in the economy, it takes time for things to work their way through, which is the, so that's why I guess it's taking time. So what the government has done is about passing on the diesel price increases. That is actually going to compress imports, and as we can see, given the fact that there is low growth, I don't expect petrol and diesel prices, diesel demand to increase much over the next few quarters. Also, 2 of our fiscal, very key macroeconomic indicators are actually very good. Now, they considerably improved relative to last year. For example, inflation is declining very rapidly, and there is an improvement in the fiscal position. So what is left is actually the current account deficit, and looking ahead, I expect that to improve. So from all these counts, I would say that foreign capital should reverse, and given the fact that it will look at in a kind of a competitive sense or other compared to other economies, if there is a resurgence, I'm confident the capital should return to India.
Confident. She's confident the capital will return to India. I just want to point out one thing here. The FDI in multi-band retail is now a reality. It's been a reality now for some time now. Do we have we seen any investments coming in that because when this whole debate on FDI in multi-band retail was there,
the rules,
and we were told that it will help in the investment climate, investment sentiment, and it will impact on other investments also. Have we seen any?
I think we're going to see that FDI thing come in another year or so. It's big giants don't move in a day. They don't come overnight. I think they take some time to move in. And I think we're going to see that happen for this country. And if you really, as I said, last 6 months, since the FDI thing opened up and even a month before, if you really look at the FDI charts for the last 1.5 years, it has almost doubled to tripled if you compare it to year-on-year basis. So, there is growth in terms of FDI coming into this country. And that's where I said most of the macroeconomic factors are not destabilized for this country. Whatever factors, whether IMF looks at or central bank looks at, they are not in a destabilizing position. So what is that factor which is actually causing this kind of trouble?
Yes.
And RBI is in the capacity today to know where are these flows going, because it's real-time mechanism which is adopted today for last 4 or 5 years. Every flow which goes in, goes out through any formal channel possible on this country is actually reported to the Reserve Bank on a daily basis. So they have the actual data. They would comfortably can come to know as to where is it, and I think Ministry of Finance and the RBI needs to work together to pull out this thing and develop strategies to stop this fall.
You mean that it's not being done?
Fall. It is not being done so far.
They are sitting and watching.
Sharma? They are watching. You see, there is a band which is there for a currency. It's a managed float, and the band has already exceeded many weeks before. The Reserve Bank has been sitting put to see how the market behave. As I said before, it is primarily to see their balance sheets being in a comfortable position, because that allows the fiscal deficit to reduce to the level which it has. Current account deficit can be explained, and with the appreciation of the rupee back to where it is expected to be, you will see the current account deficits going down. As Paranjoy also said, clearly 80% oil imports, large gold imports. As soon as that happens, we will see that happen, smoothing off, and the current account deficits will balance out. So what international agencies, I'll just take a minute more. What international agencies majorly look at are some macroeconomic figures like the fiscal deficit. So if you're able to show a fiscal deficit, let the rating agency internationally do that. confidence, international
So
confidence.
are you trying to say that there is some amount of manipulation?
There's a total manipulation which is taking place just to keep certain figures in tune to show that everything is okay, and that's where they're putting it on CAD. I think the Ministry of Finance, the Reserve Bank of India needs to sit together to find out where is the run on the dollar in terms of purchase of dollar, which is making the rupee go down, and plug the pool out from there.
Dr. Sharma, do you agree with him that there is certain amount of manipulation going on?
I don't see any manipulation in the economic variables, in the economic indicators, but certainly growth is need of the hour at this juncture.
Right.
Because if there is growth in the economy,
And
your current account deficit.
And the finance minister says that investment is the key to the growth.
Yes, investment is key to the growth, and cutting policy rates is key to investments. So firstly, RBI should cut the policy rates by 100 basis points immediately. Then that will attract foreign capital as well as Indian capital, domestic capital also. That will revive growth trajectory, and if your growth trajectory is expanding in the higher level, your current account deficit and your fiscal deficit also becomes normal, because that is ultimately a ratio of our GDP. If your GDP is in the higher trajectory, your current account deficit becomes normal. If your GDP is in the lower trajectory, say 5% or below 5%, your CAD and fiscal deficit trajectory also expands, your ratio also expands. So firstly, we should focus on growth, reviving growth trajectory by investments, by boosting domestic and foreign investments. And for investments, we need to cut our policy rates by reducing the policy rates from the RBI side, and with some policy measures also from the government side.
Okay, Paranjoy, yes.
Yeah.
Paranjoy, I want you to address the other issue also. Today, the finance minister says that by Monday, Mayaram committee is going to present a report about FDI.
Okay. 2-3 things. Let me first say why I disagree with a point of view that Dr. Sharma. I think interest rates matter, but interest rates, the ability of interest rates to spur investments, I think, in my opinion, is being
Overrated?
Overrated or exaggerated. Because I don't think the Reserve Bank of India is really going to be tinkering with interest rates so drastically at this juncture.
And you want 100
Why?
basic
Because,
points.
yes, I don't see it happening. Yeah. I see inflation pressure still very high in the economy, which will make the Reserve Bank act in a very cautious manner. 2 points you should be noted. In 2011-12, for the first time in the history of this country, outward flow of foreign direct investment exceeded inward flows of foreign direct investment. If all our industrialists who are investing in the rest of the world invested in India, we would may not
even
be,
50% of
that. Then we wouldn't be complaining about 2% growth of index of industrial production and 5% rate of GDP. That's point one. Secondly, I think, yes, the ability of foreign direct investment and foreign portfolio investment to change the scenario drastically, in my opinion, is limited. You talked about the share market. The sensitive index of the Bombay Stock Exchange was at 21,000 in January 2008. It touched that figure close in November 2010. You are still struggling. You're at the 19,000 mark. Why? Now, there are a number of reasons. We are today in a stock market which are excessively dependent. It goes up or down depending on the purchase or the sale decisions of foreign institutional investors. As we have discussed in another program on your channel, in this program, Girish, not even 1% of India's population are investors in the stock market. We have a very, very thin domestic investor base, and we are excessively dependent on this kind of money, which is inherently volatile, which is inherently quite hot, like the weather outside, if not, distinctly warm. It comes and goes. And the Reserve Bank, though, I mean, today you don't have the kind of foreign exchange constraint that you had 22 years ago, but the RBI has a limited ability to intervene in the foreign currency market to really sell dollars, to curb the volatility and keep the rupee at, say, 57, 58 or that level.
No, but what about Aman Agarwal's charge that there is some kind of a manipulation happening to...
Maybe he knows about it. Maybe he knows how it's happening in the IPL. I'm not privy to it.
Not just IPL. He was talking about how the RBI. Yes, Renu. Yes, Renu.
Yeah. Perhaps what Mr. Agarwal might be referring to is speculation in the foreign currency market. You see, whenever there is a very rapid fall in the exchange rate, or a rapid move in the exchange rate rather, in either direction, there are people who will take positions. And those positions may be coming from the real economy side or from the financial side.
Okay.
In this case, what happens is typically when the expectations of depreciation gather momentum, exporters do not realize their earnings. So, there is some way in which the Reserve Bank, it intervened the day before, finds a way to bring back exporters into the foreign currency market and sell. It's just augmenting supply of dollars. So maybe that's what he refers to. But that's typical in foreign currency markets, and central banks can manage exchange rate expectations in a manner so as to moderate the pace of change in the exchange rate and limit and moderate volatility.
Okay. I think on that note, we have to end. We have completely run out of time. But the responses are mixed. The economy, everybody agrees, is not in the best of shape, and there needs to be a lot of improvement in it. How long it will take, what kind of measures are needed are something which will continue, which debate will continue on that. We will keep watching. Thanks to all my guests, Renu, Kohli, Aman Agarwal, Dr. S.P. Sharma, and Paranjoy, Guha, Thakurta. Please keep watching. We'll come back with another issue, the big picture, same time tomorrow.